समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या? समझ में नहीं आया।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
Everybody is curious about what IMF has given Pakistan and why and how it's given. What did India do at the IMF board meeting? What India could have done? So we are doing a bunch of things. We are trying to understand how IMF works, how much has IMF given Pakistan, and on what basis. What is that forcing Pakistan to do? What is called as IMF conditionalities, because IMF goes out to lend to countries when they are in deep trouble. Why do countries go to the IMF? They go to the IMF because they go broke, right? Why do you go to the neighborhood money lender? You go to the neighborhood money lender because you've overspent. Either your income is less than your expense, or you spend more than your income. So you can go to a bank will ask you a collateral, right? You go to a financial institution, a non-banking finance corporation, they will ask you a collateral. IMF is a global organization. It does not ask you for a collateral. It does not. In fact, the only people who ask you for a collateral under foreign lending are the Chinese. They take your projects as collateral, and if you can't pay, then hummer tota happens. That apart, what does IMF want? IMF's charter is to help countries, according to their view, with which frankly I agree, help countries restructure and rebuild their economies, because they have a view, you can call it an ideological view, which is that good capitalism is good, or something like good capitalism is possible, good soft capitalism is possible. So when they bring the money to you, they say, listen, this is our diagnosis, we think these are the reasons you've gone broke, right? We will give you the money, but you will now be a good child, you will increase your tax collections, you will cut your government expense, you will cut your deficit, etc., etc. And most importantly, you will privatize your state-owned enterprises, because government is just sinking too much money there. Remember, a lot of the reform that we celebrate 1991 onwards is because India had a severe balance of payments crisis that led to Chandrasekhar's government sending out India's gold to be mortgaged outside, so India would not default on its foreign payments. We live in a neighborhood which is IMF addicted, which is debt addicted. As we talk right now, three of our neighbors, that's Pakistan, the champion of champions, today owes the IMF about $8.667 billion already, and has another about $6.5 billion on tap, which it can borrow. Of course, it keeps paying back what it's got earlier. These are called circular loans or debt traps. So when IMF brings this money to you, they say you will now do the following, and we think if you do the following, your economy will recover, you will have growth, and you can pay us back. In India's case, I'm quoting this not by way of comparisons, but just to tell you how this works. In India's case, India's reform, because reform was so quick and so dramatic, that India's reform really worked, to the extent that India did not even pick up the entire IMF loan India had been sanctioned. They picked up a large part of it. Once the crisis was over, they did not take any more. The fact is that since 1958, since IMF started lending, this is Pakistan's 25th IMF bailout. Although the first one in 1958, they had an allocation, but they did not pick up that money. So I count this as 24th IMF bailout. So Pakistan is the champion of these addicts. That's why I said champion of champions. Pakistan has needed an IMF bailout on an average every 2.5 years. Sri Lanka has done not too badly. Bangladesh is much younger, but still they've been to IMF multiple times. Fortunately for India, since 1991, India has not had to go back to the IMF. Before that, India went to the IMF just after the Bangladesh war. because country had a balance of payment crisis, and once earlier in the mid-60s, 1966, when India also had to carry out a devaluation of the rupee. So that is how the subcontinent's history is. This is among the poorest parts of the world. Within these poorest countries in the world, some have got used to periodic bailouts. Pakistan is number one. So what happened? On May 9th, the IMF carried out the first review of its EFF. What is EFF? EFF is Extended Fund Facility. When IMF says you can have this much money, this much loan is available to you on tap, but we will carry out periodic reviews. So with every review, we will release some money for you. So they released some money the first time to Pakistan, and now with this first review, this is the first review now because the loan was sanctioned last year. Loan was sanctioned in September. This is the first review, after which another tranche was released, which was like $1 billion. After this, there will be 5 more reviews. This loan, this EFF or Extended Fund Facility, think of it like a cash credit account that a company might have in a bank, which says this much money is available to you. Come and show me your receivables, right? If your business grows, then you can take this much, borrow this much more. So this works exactly like that. There will be 5 more reviews. This will last 37 months. What this means is, over 37 months, Pakistan can borrow this $7 billion provided the IMF conditions are met. What those conditions are, I will tell you about. In fact, as I started reading up on the conditions, it took me into a different rabbit hole, and that was Pakistan's agriculture and power. And I now find that each one of these is a story that I will talk about in future, subsequently in one of the other coming episodes of Cut the Clutter, because each one is a fascinating story. So I will mention these in passing today, but the fact is those are areas in which IMF has enforced reform. And you know what? Pakistan has carried out that reform. I know it feels like a bitter pill, but they have done it. Now, in addition to the 7 billion, IMF has also put on tap another $1.4 billion for Pakistan, which is to improve climate resilience and calamity avoidance. This to me sounds a bit like a bonus, but you know what? When you don't want a major country to fail, a major country's economy to fail, because you know what happens if a major country's or even a small country's economy fails, everybody feels the impact. And that's what IMF has done. It has traditionally bailed countries in economic crisis out, irrespective of what their politics is. Very often it's given money to really bad dictatorships as well. Now the amount currently drawn by Pakistan is $2.1 billion. $1.1 billion to start and $1 billion now. How the IMF works is that IMF has members who have voting powers. Now voting power depends on your relative strength, your relative contribution or strength in the global economy. How that's complicated is a little complex and not beyond our syllabus right now. But if you see this, US's voting power is 16.49%, 16.5%. That's key. I will tell you how. Anything over 15% is key. That amounts to a veto right. I will explain to you how. China is 6.08%. India is 2.75%. In fact, the director that India appoints to the IMF, executive director, also represents Bangladesh, Bhutan and Sri Lanka. All of them together is 3.05%. Pakistan is 0.4%. So India is 2.75%. Pakistan is 0.46%. Why did I say that only one country has the equivalent of a veto, and that is America? That's because for key decisions at the IMF, 85% vote is required. 85%. So if the country having more than 15% is not voting with you, you cannot get 85%. So without being defined as a veto, what the US has is a veto. And the other countries can lump it, they can complain, etc., etc. But usually you will find at the IMF, members do not let countries die, countries' economies die. They don't join hands together and say, let's kill this country. Now, India, just in ranking, is number 8 in the IMF by way of its voting power. What is it that the IMF said while approving Pakistan's new latest tranche? They said there's been steadfast implementation of the 2025 budget. In fact, Pakistan has cut its deficit heavily to the extent that the first half they actually have a 2% surplus, 2% fiscal surplus, which means they've really cut their spending heavily. What that has also done is Pakistan's growth had begun to recover just a little bit. And there was an expectation that this year it will come to about 3%. But now IMF also says that because of the situation, it looks like it will stop somewhere near 2.5. They still hopefully estimate it to be 2.6%. So this is really tightly controlled spending and thereby a tight economic growth as well. Since the EFF, the first tranche was given, the IMF says economy has continued to recover. Inflation is sharply lower. Inflation has come lower, although they say that core inflation still stays at 9%. However, for the month of April, just this month of April, inflation was negative in Pakistan. Just this side of decimal a little bit, but still negative. Pakistan's central bank has cut rates. Hold your breath. It has cut rates since June, between June and January this year. June last year and January, that is about 6 months. They've cut rates by 1,000 basis points. So the rate at which the central bank in Pakistan gives money to Pakistan's banks has come down from 22% to 12%. It's still very high at 12%. In March, another tranche of cuts was expected, but they've decided to hold it because of global uncertainties, and the IMF in its report seems to appreciate that. And I know everybody's interested in growth. So see this chart also. This is the IMF's chart. The current growth, the last 2 years, 2.5% in 2024, now estimated 2.6% in 2025, 3.6% in 2026. And if you see the long-term projection, that is the other graphic. We are taking all these graphics from the IMF country report. So thank you, IMF. This tells you that even from 2030, IMF is estimating growth to be at 4.5%. Right now, I'm not an economist, but I can tell you some basic principles. Because for a country to grow, the country has to spend. And if Pakistan is going to continue controlling its fiscal deficit so strongly to get financial discipline back, and that is what IMF's pressure does to you, right? Then it cannot spend to drive growth. India, for example, has 6.5%, 7% growth or thereabouts, while the fiscal deficit also stays close to 5%. Pakistan does not have that ability, nor will the IMF give it that freedom. That will keep Pakistan on the straight and the narrow. If Pakistan stays on the straight and the narrow, who knows, in the course of time, before we know, again on the same 2.5 year per bailout basis, say soon enough they'll be back with the IMF asking for more money. In fact, while these negotiations were going on for the latest tranche of EFF, Pakistan already upped its defense budget by 18%. In their annual budget, they had upped their defense budget by 12% compared to the preceding year. But from what they've added now, from say about 241 billion Pakistani rupees, they've gone up to 252 billion Pakistani rupees. This is an increase of 18% over the previous year. So Pakistan does not have any restrictions on defense spending, but Pakistan has definite yardsticks on how much fiscal deficit they are allowed to have. That said, the IMF also says that Pakistan's reserves situation has improved. It's about $9 billion, which amounts to about 1.5 months of imports. They expect it to go to $13.9 billion, let's say $14 billion next year, which would be 2.3 months of imports, and then 17.6 billion the year after, which would be 2.8 months of import. However, the message is to keep things tight. That means keep monetary policy tight. Don't let too much money go into the market, right? Keep government spending tight and privatize. Now, a lot of the IMF conditionalities, I will share the entire IMF country report with you. Please take a look at it. If you read about Pakistan, if you want to understand what's going on there, especially with its economy, you are a strategic scholar, you are a policymaker, you must read this, because this is something invaluable. This has data on Pakistan, right? This is very different. You don't have to rely on any so-called experts on TV channels telling you this, that, etc., etc. This has no opinion. This has data, and opinion that is there is based on analysis by top economists in the world who work at IMF. This is a really valuable document. As you go through it, it's a long document. You will also find a bunch of really interesting graphics towards the end. Some of these are as per our intuition, some of these are counterintuitive. So even if you see Pakistan as an adversary nation, the important thing is to understand the facts about the adversary, and that's why this report is very important. So look at the report. This report says same conditionalities that we see everywhere. You have to strengthen your tax collection by reducing compliance risk management. We could say that this to our tax department as well. Then they say, and this is very important for us in India as well, they say that enormous amounts of Pakistani money are held up in litigation, right? In appeals. Just like our system, there are appellate tribunals, there are commissioners of Federal Board of Revenue, or in what we call as income tax. Then there are cases sitting in the courts. So they've worked out a system whereby the Supreme Court is also working with the government, it seems from this report, and they are holding mass hearings to clear these cases within this year, large number of these cases within this year. So a lot of money will come back to the government, or at least this litigation will reduce in the system. That is part of the IMF conditionalities. However, what really interests me, two other things are agriculture, reforms on agriculture. So last year, this is a story we completely missed in India. While in India, we keep fighting over MSP, how much MSP should there be a law guaranteeing MSP? What should the government procure? Should the government procure everything? Pakistan abolished procurement last year. This was part of the IMF conditionalities. They did not procure any wheat last year. They also abolished MSP. That has gone on this year as well. Wheat has just been harvested, and you will see a story in a day or two from Devdatta Chakrabarti, our correspondent who tracks Pakistan. You will see the controversy and the arguments and the debate there. The government has said we are not fixing the price of wheat. Let wheat growers find the price that the market gives. If the market doesn't give you adequate price, we'd rather that you grow oil seeds and cotton. We will not buy it. And what happens if you are short of wheat? If you are short of wheat, we'll buy in international markets. We will get it cheaper there. That is you can call it a bold thing or a risky thing, depending on which side you are on, which side ideologically you are on. So if you're on the left ideologically, you will say this is nonsense and risky. This throws the farmer to the wolves. If you are on the right and you believe in reformed economics, then you will say, this is a bold thing to do, even under the gun from the IMF. Any which way, Pakistan has finished MSP and procurement and government procurement. They are leaving the farmer to the market. IMF notes in its report, in its country report, that the last 6 months, last crop, this has worked well for the farmer. They say food inflation is low as a result of this. Wheat prices have remained in control as a result of this, and the farmer has also benefited. There are farmer associations in Pakistan which are protesting. I will mention those to you. I will also share a story from Dawn about that. But that is what they've done. However, even a more striking thing than stopping MSP. No MSP, think. Stopping MSP and government procurement, because government procurement means that governments get involved in commodity markets. So IMF's conditionalities specifically say that governments will not intervene in commodity markets. So neither the federal government, as they say in Pakistan for central government, or provincial governments or state governments, they will not mess with the commodity markets. Let commodity markets find their own price. That is a big change and big reform. Again, I don't think it could have been done without a crisis or without compulsion. The more dramatic thing they've done is to bring in an agricultural income tax. Now that's a debate that goes on and on and on and on in India. And then the final excuse is, in any case, central government can't tax farmers. But of course, people on the left will say farmers have no surplus income, so how can you tax them, right? Or you will say, when you want to do a real cop-out from the debate, you will say, but in our constitution, central government cannot levy income tax on agricultural income. Only state governments can. And let us see किस स्टेट गवर्नमेंट की, किस चीफ मिनिस्टर के बाप की हिम्मत है who will tax agricultural income. Pakistan has, however, done it. They've done it at a high price. They've done it at a high price. September 2024, the IMF program started. At the completion of 12 months, Pakistan, all provinces are supposed to collect this agricultural income tax. Think about what the top income tax rate on agricultural income is in Pakistan. It's 45%. It's 45%, and also it's just a little over what highest income people pay in India. They pay with all the surcharges and think about 43 to 44%. 45%, and many of the exemptions that people had earlier, for example, for livestock, if you have buffaloes or cows or sheep, etc., you got an exemption. All of those exemptions are off to keep it simple. However, for corporations in Pakistan, if what I read is right, and I think I've read fair bit, for corporation the tax is only 29%. What does that mean? That's a nudge to the farmer to corporatize. Now, it's one fact that we must remember, that the average land size, average plot size for a farmer in Pakistan is still much larger than in India. It's been declining. I will share with you a story that says it's declining and it's a cause for worry, but it's still 2.6 hectares. 1 hectare is about 2.5 acres. So this is about almost 7 acres. That's high. In India, it's much lower. Yet, in India, it's much lower. Also, Pakistan has many really big farmers, big feudal farmers. The Bhutto family, for example, God knows how many thousands of acres of land they had and how much they still have. So the farmer, the nature of farming is a little bit different in Pakistan than from India. Contribution of farming, agriculture is also much larger in Pakistan to the GDP than in India. In Pakistan, it's about 24%. In India, it's about 16%. So you can just say, top of your head, contribution of agriculture to Pakistan's GDP is about 1.5 times higher than India. So Pakistan is less industrialized. Pakistan has less of the economy generated by services. Still, that's why the share of agriculture is much higher. At the same time, this agricultural income tax is just astounding. And I thought that is something a lot of people in India will sit up and take note of. If you want to read more about it, go to this IMF report, and I will also be sharing with you a couple of links from Dawn, and I will share with you links from another couple of publications. Now, the other thing is, which is quite incredible, and once again, I'm repeating this once again, I'd say hold your breath. The power sector reforms. Power sector reforms, how does power work in Pakistan? One basic difference between Pakistan and, say, India is, in India, every state government is in charge of its own power distribution. It buys power, it distributes, it collects money, then it fixes differential rates. That's usually done by the State Electricity Regulatory Commission. Then these rates are for this much for commercial, this much for industrial, this much for domestic, this much if you consume up to this much, if you consume up to 200, nothing in Kejriwal's Delhi, which is the model everybody follows now, right? If you go from 200 to 300, this much, etc., etc. And periodically, state regulatory commissions fix these prices. If you look at Delhi, for example, the highest price would be about 7.5 to 8 Indian rupees. In fact, anywhere, electricity price, that will be the highest in India. In Pakistan now, after the reform, first of all, the farmer gets no free power in Pakistan. If farmer has to buy power off the grid, it's the equivalent of 12 rupees 41 paisa of Indian. I'm giving Indian rupees. Pakistani rupees will be 45. Indian rupees, 12 rupees 41 paisa. For commercial, it will be close to 21 rupees. So power has become really expensive. Why? Because power has been sold very cheap or has been given nearly free, and bills have not been collected. in the process, everybody has gone bankrupt and everybody is debt laden. So these power utilities which have been selling this power, they are debt laden. Then government gives them money, or banks, they give them money, so they use the same money to repay. Then they have more interest on their debt. So this has become a debt trap for the entire country and its economy. In IMF speak, it's called CD. CD means circular debt, which means I have this much money, I spend it, I borrow this much, put it in this pocket, then I spend it, I borrow a little bit more, put it in this pocket. So this carries on like that, a little bit like Milo Minder Bender of Catch 22. Now this is a commitment that Pakistan has made, that this year they will cut 2.4 trillion Pakistani rupees. If you want to calculate precisely, then today 1 Indian rupee is about 3.29 Pakistani rupees. So you can make your calculation. This 2.4 trillion Pakistani rupee circular debt, right? That Pakistan government is committed to IMF, they will finish this year. But how do they finish it? They can't print money to finish it, because if you print money, your deficit goes up, your inflation goes up, everything. No. They will issue bonds. They will issue bonds that people can buy, maybe institutions can buy, which will bear interest but not bear interest. What do I mean? These bonds are called sukuk, S-U-K-U-K. Sukuk is an Islamic system which are like bonds in our country, but these do not bear interest, because in the Islamic system, Pakistan is an Islamic republic, you can't be charging interest. So sukuks become as if you're holding equity in some structure, and you get benefit on that equity. So that's the reason I said these are interest bearing, but at the same time not quite interest bearing. Then there's the usual stuff about you will strengthen your anti-corruption institutions, etc. But again, the important thing is that you shall bring in a new legal system, a new legislative system for your state-owned enterprises. And this new law, and there are only 9 major state-owned enterprises in Pakistan, this law will be in concurrence with similar laws in the OECD system, that is the rich countries of the world. That will be painful, but Pakistan has been privatizing its public sector at a very, very, very fast pace. In fact, both countries started around the same time. India lost its nerve very soon. Pakistan has carried on. So Pakistan has very little private sector left now. In fact, when Rajiv Gandhi was assassinated in 1991, and Benazir Bhutto was among the leaders who came to India, as she stepped into Ashok Hotel where she was put up, I know we are always hard on the Pakistanis, that's the only hotel we found for her. She walked in and she asked one of her staff, and some of her were hanging around there as reporters, so who owns this hotel? And her High Commission staff said, oh, Government of India owns this hotel. She said, oh, if they had Nawaz Sharif, he would have already sold it, right? And Nawaz Sharif started selling all of these state-owned enterprises, and they've shown very little affection for them. What also helps is the fact that Pakistani politics does not really have a left anymore. It hasn't had a strong left power for more than 50 years now, although Bhutto used to call himself a leftist and nationalized a lot of private companies. But since then, there is no left power. Left power has completely declined also from the Pakistani debate. And that's the reason they've gone ahead and they've done it successfully. However, one is still defying them, and that one at least we licked, and that is their state-owned airline. So they've not been able to privatize PIA yet. At least we privatized Air India. They had promised to do it last year. It didn't happen. Then they promised to do it by the middle of this year. Now they are saying, let's wait till the third quarter of this year. And I see already in Pakistani media little things coming out saying, oh, last 3 months PIA made a profit. So it will be a challenge to privatize that. In conclusion, I will just share a few charts with you from the IMF. The first shows you Pakistan's growth from 2012 to 2024. You can see they also went negative in the pandemic year. Then they came back strongly, 6.5 as everybody did, and again dipped the next year. And that's where they've got caught in the 2.5% growth rate. Then you can see a chart that shows rate cuts by the Pakistani central bank. See how the rate cuts went up as inflation was going up and Pakistani rupee was weakening. It went to 22% and then came down to 12%. That's where it stays. Then third interesting graphic, That tells you Pakistan's gross reserves. These are gross reserves. It's a figure of sort of a tilted W like this. They've gone down, then gone up a little bit, then gone down, gone up just a little bit. And the exchange rate. Exchange rate, you can see that Pakistani rupee has been declining. However, lately it's been stable. And in conclusion, the reason we've done this in so much detail, so much granular detail, is because we remember, and all of us should remember, what Sun Tzu said. And Sun Tzu said, which I paraphrase, of course, that the way to deal with an adversary, if you have to deal with an adversary, you have to first understand them. And that is what we are trying to do.